Let's start with the news on the commodity market. Oil prices kicked off the previous trading day with losses. Thus, oil dropped below $66 per barrel, but then stalled. The commodity market was supported by OPEC Plus, that once again announced in a statement that it would not boost oil output. Despite pressure from some countries, including the United States, the Organization of the Petroleum Exporting Countries decided to stick to the existing policy of monthly oil output increases. The alliance believes that its deliberate approach to adding supply to the market will not cause glut as well as help oil quotas rise. On Thursday, Brent crude oil futures slid by another 5%. On Friday, the price pulled back, entering a technical correction, which brought the benchmark above the psychological level of $70. Considering the current market situation and bearish sentiment, a return to the area below $69.50 may well lead to a further drop in oil prices. As for the foreign exchange market, the ruble gained in value, trying to fix below the level of 74 rubles per dollar. At the same time, yesterday's macroeconomic calendar was bereft of any important releases that could support the Russian currency. Apparently, market participants believe that the Russian currency is highly oversold. The lack of fundamental news could further contribute to the ruble's rally, but the United States is set to publish statistics on its labor market today. The US jobs report is forecast to be extremely positive. This means that the greenback has every chance of getting strong upside momentum. Thus, on Thursday, the dollar's correction against the Russian ruble slowed down slightly around the level of 73.50 rubles per dollar. If the price is able to fix below this mark, the Russian currency will most likely extend gains. Otherwise, the US currency may start to advance and return to 75 rubles per dollar, the upper boundary of the range. And as for gold, the precious metal began to show signs of recovery by the late previous trading session. Gold prices gained, but very slightly, due to the prospects of a tighter US monetary policy. Dependence on the Fed's decision ruins gold's reputation as the main safe haven asset. Therefore, it can be assumed that the current growth is purely technical in nature, while globally there are still no factors that could drive gold prices up. On Thursday, gold futures continued to edge lower and approached the level of $1,761 per troy ounce. Thus, the precious metal is expected to extend losses up to local low. Then gold may resume its bullish run. Until then, there is a risk of a trend change and a further decline in gold prices. According to analysts, Friday is going to be quite interesting, at least for the ruble and oil. It won't be long before we find out the further dynamics of the trading assets. We hope you will make a profit. Have a nice day.